All right, ladies and gentlemen, we are live. Welcome back to them Hollywoood trades. All right. I've been seeing a lot of people complaining about gold lately. We get a lot of people complaining about gold. It's like, I don't know, you know, gold does, it does what it's supposed to do really hard when it's supposed to do it and when it does it. And I guess, like these long stretches like kind of confuse people. But just like Bitcoin, right, which pretty much does the same thing. Uh, Once the directional liquidity is exposed, you'll begin to see why it responds the way it does, because the algo and entry triggers just take off when directional liquidity is absorbed or exhausted in one direction or another. So right here, you see we're starting with the hourly chart. Hourly chart is a really big basis for understanding internal liquidity. Anything smaller is more entry level chart where you would enter. Anything higher is more like overall PD. So as we can see, after the all-time high event that happened up here, a lot of people didn't realize how many buyers got trapped here. Now, if you look at the pips from here to here and just look at that number of pips, almost 150, 2150 down to 20, what was that? That was about 400 pips. And then even here, even more pips. That's how many buyers got trapped in this move in a flash. So with that much liquidity, which is here to here, if you take a standard deviation drop with the amount of liquidity that was taken there, that's when you start to get this move. Usually in a normal circumstance, this would have bounced back up to retest this imbalance area or this block. But because so much liquidity was trapped here, it didn't have to go back up there, and there was a liquidity zone here from the previous all-time high wicks. So it touched that liquidity zone here, and that's all it needed to rebalance a little bit of this and grab a hold of this volume from these blocks here. You see what I'm saying? Boom. They were able to mitigate. That was the highest place they could let go of any bad buy orders, and they let them go, and boom, come back down, break a structure again. You never get back above this hourly order block until it absorbs more sell side liquidity here. Let me take these pivot points off. Sorry about that. Make that PD a little cleaner. Some people like looking at pivot points. I really only use them. I can't explain the algo, how the algo use CM pivots, but pivot points are pretty good when you have a good algo to plot them. But for now, we'll just look at price action inside of the drawn zones. So, again, this is, none of this happened out of the ordinary. All this that I drew here was on the chart already. All these zones, this zone here, this zone here, as you can see, those zones were valid. And they were used over and over in this down, this sell from the all-time highs. And of course, people will sell from all-time highs, but so many got trapped, and that's what we're dealing with now. We're just now getting back to equilibrium where some of those trapped orders can get mitigated and reclaimed, as we have here. This is one of those reclamation points, and we still have yet to come up there. So all this has to be rebalanced. This imbalance here, and slight imbalances here. Of course, we'll see all of that, but we will retest this order block at some point, as well as that order block at the 2100 area range. But as for right now, a lot of people seem confused. I don't know. I'm still trying to figure out what they're confused about. I guess people don't realize how much liquidity got taken there, and you don't have your zones drawn on your chart. I'm not sure, because if you have your zones drawn on your chart, you can really see where this price has been respecting. So boom, we had all of this here, and then a lot of people thought that there was going to be a buy back up right here, but there was no evidence that this order block was strong enough to push that back up. You have to allow price to test this order block, which was this move right here, but you can see it was speeding into that order block, and that was letting us know, there was liquidity absorbed somewhere up in here. And this speed that you see here of price action is not indicative. When you retest an order block like this and you want to see a buy move, of course, in retrospect, you wouldn't have wanted to buy here. You would have wanted to buy here at the retest of the order block. That retest was severely failed. Once that break of structure happened, there was one revisit for balancing here and mitigating here. You see, that's the balancing point. Boom, and re-mitigation of this underside of this block. That's called the mitigation from the underside of a mitigation point. Boom, you drop down from there. Boom, further break of structure, retest. This happened. I traded this. I actually traded this buy up. No, I didn't trade this buy up. Actually, waiting when Sunday opened, as you see, the Sunday down here. Boom, that was the start of the week. I started off with a sell. I seen it retest this propulsion area right here. Boom, rejection. Of course, this zone, as I said, was already drawn. This zone is drawn from far back. We're not going to scroll back that far right now, but just know that that zone has been here. Boom, bounce off that zone. I was only targeting internal. That was 100 pips, $10-ish. Boom, targeted internal. It did continue to break structure past internal. Small revisit to the block, and then boom, my partner did catch all of this. And after testing again these lower zones here, I don't know if we can see. This is an area I had marked up previously, but it was testing all of this zone here, order block here, order block here. It did not make it to the base order block here because there was some liquidity. There's some liquidity points here and here, what I would call an algo point. I should have had that algo zone marked on the chart, but it may have muddied up my read too much, so I deleted it. But that algo zone is existence, as you can see. Boom, mitigated from the bottom of it here. Boom, re-mitigated from the top of it there. So that's really, how you can mark off. I don't like to mark off hourly zones. These zones are more weekly and dailies that you see here. I used algo SR levels as a mark on my chart for these lower time frame zones, and I will delete them from time to time. But as you can see, price did play with those zones. It did not get to absorb the sell side out of this, which may still be an objective, to absorb the sell side out of this block. My partner seems to think that it wants to absorb some of that weekly sell side that's left down there. I don't see it as implausible to have the juice to trap sellers who think for whatever reason it's going to keep going, to trap them and then continue to come up here. That is going to be, I guess, some of the only liquidity based evidence of being able to come up here with enough sellers trapped to not stop that move in its motion. So as we see right here, I do use trend lines from time to time. I try to use as much detailed but not messy analysis. I try to gather as much confluence as trend lines have always worked from the beginning of trading, and they still continue to work today for a confluence. So that is a confluence, as we see. Boom, liquidity drop here, right? Boom, boom. You always get a base, then you get a drop either to the top or the bottom. In this case, top failed, bottom failed, and then we have stabilization. This is what I call a bodybuilder. When you get a lower shoulder, a head, and a higher shoulder, that's what I call a bodybuilder, and you'll see some evidence-based movement after that. So now what we're looking at, I'm going to try to finish this up. because now what we're looking at is basically an upward move that absorbed a lot of buy side, came back into this zone, rejected off this zone. This is not a neck breaker, what I would call a neck breaker, which is the opposite of a bodybuilder, where you would have a higher shoulder, then a lower shoulder, and then down. So it's telling me that it doesn't want to absorb fully this, but maybe just wants to balance a lot of this out. As you can see, I do use volume profiles as well. And a little thing about volume profiles for people who may be confused about them, these higher end zones are bases, and that is where price will get its heaviest stretching from, whether it stabilizes above the base and goes up or stabilizes below the base. In this one, you can see it hit this strong volume zone, wicked through it, right, to balance as much of this as it could. It still left a little imbalance here, and that's indicative that it cannot stabilize in this price zone. Too much resistance from all of this, and it dropped off this base. As soon as it left this base, dropped. In these lower volume areas, you will get one of two things. You'll either get a speed through them, or you'll get an absorption and a wicking through them, right? As it began to leave this base here, which it just created. This was an imbalance, low volume zone before all of these orders came in. It began to fill that area in and create a base right here at this zone. In my opinion, for a push into this, maybe stopping around here if it doesn't get stuck in here and wicks out. So all depending on how much liquidity we absorb here will determine how far we can come down. You see I have this mitigation block spawning from here. That is a liquidity zone where I expect, and there's an algo SR, and we have the wedge here. So somewhere over here is what I'm projecting, if we can absorb enough liquidity coming up to this mitigation liquidity area here, right? I do have my consequent encroachment marked off of my nearest imbalance. So that, and this is targeting coming into opening later today and into tomorrow. This is what we're hoping to see. If we do get a drop for whatever reason before we come here, there's not going to be enough liquidity for us to continue here into this imbalance. We'll get a sharp rejection from this low volume zone here. I do mark those nearest low volume zones with volume gap, as you can see here. But yeah, that's what we're expecting. It's not as complicated as it would seem, you know. It does take a while to get to these points. There is a whole nother way that we use, me and my partner, as you know, Rain Man, we use investing.com, hoping to get sponsored by them soon, for their moving average system. A lot of people like to use visual aid on the actual chart, but the investing.com has a moving average block, which we're going to be covering in a lot of videos, because it's very helpful when knowing when liquidity is exhausted. When all those boxes turn green and all the averages have been topped by price, or when they turn red and the averages, the price has went below all the averages, that is a very good indication of liquidity being exhausted. And those are the points we want to trade from. So with that being said, I didn't provide any of that analysis here because there's an extensive series that we're putting out right now about how we use the averages in that way, and how we look at the overall momentum basis of price action. But this is the more technical, the in crowd like to look at things this way. So we're using the in crowd readout plus a little volume for support. You know, I would love to see more volumetric readouts, because this is highly visual. It helps you really understand it. You can see, you know, you don't have to kind of look at price action all the time to see where these bases are. And even here, this right here wouldn't even have showed you, just looking at this imbalance, it wouldn't have showed you that there's a small base inside of this imbalance, and then there's more imbalance here and here. So this is more so where we'll be expecting price to come to before not long, and then all of this here being voided plus having liquidity, we'll be expecting another base to form somewhere up in here. You see, they happen at a pretty good interval of each other when these bases form. And when you have your zones drawn out, you can see, how price is playing these zones right now with how much orders are going in the zone. See, people don't know how to look at that. And then, of course, you have over candle volume here. So we got a little less volume coming in from Friday than we did on Thursday or Wednesday. But the volume is still high, and red volume has been taking the average volume here. So we'll be looking at that. We'll be looking around this zone. And like I said, we'll be expecting a mitigation here. It's not rocket science. It will follow a trend line as well that I don't have drawn out.